I'm Matt Bouchard with REIT.com here in Chicago for REITWeek 2013. Joining me today is Guy Metcalfe, Managing Director with Morgan Stanley. So Guy, we've seen CMBS delinquencies falling pretty significantly. Do you think this will have any impact on CMBS issuance going forward?
I think on the margin, Matt, it may have a positive impact, but I think what will have a bigger impact on issuance going forward is just this overall state of the real estate industry and the demand for capital, debt capital in particular, and then of course those that are willing to provide or supply that debt capital. And I think there is, I wouldn't call it so much pent-up demand, but there is an enormous amount of demand for yield. And I think people are searching for yield and looking at real estate as a great place to find yield. And you don't have to search too far than the CMBS market or other types of debt for real estate and say that's a pretty good risk-adjusted return.
And as the REIT market has emerged from the global downturn, we've seen a couple of REIT-to-REIT mergers. And right before this event, we saw one take place. Are you surprised there haven't been more? Do you think we'll see more activity like that? What's your take?
Typically, there are, at any points in time, there are triggers that suggest that there should be more M&A or less M&A, as the case may be. And I think there are a number of triggers that would suggest there should be more M&A. But there are also some impediments to M&A, and I think the impediments, once they subside or go away, then I think there will be more activity.
And we've seen some percolations in the IPO market. What trends or commonalities do you think companies that we're going to see come public, what do you think they're going to share?
I actually think we're probably going to have a bit of a barbell approach in the IPO space. I think we're going to see some large companies, very well-run companies, large platforms that in many cases were subject of being taken private or out of the public markets a number of years ago, that just where those companies or where those funds are or sponsors that acquired those companies, where they are in their life cycle, that we're going to see some activity, I think reasonably predictably, out of a number of sponsors for large, well-run companies. So I think we're going to see that on one bookend, and on the other, in fact, if you look at the companies that have come public in the last 6 or 12 months, they've not been large companies. They've been smaller companies, not too small, because I think we've seen that the market doesn't like too small. But good quality companies that had defined strategies, well-structured, that were willing to go public at the market clearing price.
Thank you so much for your time today.
You're welcome.
For more on this and other REIT news and analysis, be sure to visit REIT.com.